In this video we are going to talk about 15 monthly dividend stocks. So before starting this video, please like this video and subscribe to this channel for our future updates. Number 15. Vanguard Total Market Bond ETF, BND. BND is a fixed income ETF with a 2.76% dividend yield and a low-risk focus on investment-grade fixed income assets in the United States. Government, corporate, and international bonds, as well as mortgage-backed securities, fall under this category. The Bloomberg Barclays United States Aggregate Float-Adjusted Index is the benchmark for this ETF. In layman's terms, the Vanguard Total Market Bond ETF is a diversified bond market investment. The shares have seen far less volatility than the S&P 500 over the last year. Over time, however, the fixed income-focused fund lags behind the overall market. Number 14. AGNC Investment Corp, AGNC. AGNC Investment Corp fluctuates from quarter to quarter. When it comes to earnings, AGNC isn't always reliable. However, over the last 5 years, the company has generated a reasonable amount of net income. It's a far riskier investment than some of the others on this list, but that's the price you pay for an incredible 11.25% dividend yield. AGNC is a mortgage-focused real estate investment trust that makes the majority of its investments through Fannie Mae and Freddie Mac, so principal and interest payments are protected. We would never recommend making this a big part of your portfolio, because the stock does not do well against the larger market and their earnings patterns are inconsistent. However, if you're looking for a high-yielding monthly payout, AGNC is a good option. Number 13. Global Net Lease Inc, GNL. In the monthly payout game, there are a lot of REITs to choose from, and Global Net Lease is one of them. GNL is a small-cap stock with a dividend yield of 10.71%. GNL invests in commercial properties in the United States, the United Kingdom, and across Europe, looking for single-tenant leases on assets it acquires in commercial regions. The majority of its properties are in the United States, and total revenue has increased rapidly over the last 5 years. GNL sales have grown significantly, and the balance sheet is strong. The issue is one of net income. It's a bit inconsistent, like many REITs, which makes the stock costly when compared to earnings. It's a more enticing story when seen in relation to the stock's balance sheet. The company's market capital of $1.6 billion is not out of line with its total equity of $1.42 billion at the conclusion of the most recent quarter. Number 12. LTC Properties Inc, LTC. LTC Properties LTC is another REIT with a 4.8% dividend yield and the highest net income in the last 5 years. LTC appears expected to continue its expansion inside senior living and healthcare facilities, owing to its continuing profitability, positive cash flow typically, and large amount of equity on the books. The stock is currently undervalued in relation to earnings, making for a handsome monthly payout. Number 11. Main Street Capital Corp, Maine. Main Street Capital Maine, which focuses on providing financing to middle-market enterprises, pays a 5.9% dividend and has grown its revenue sources over the last 5 years. The company is quite successful, and it occupies a unique niche as an investing arm in a market where corporations aren't quite large enough, or don't want to raise cash through the stock market. Number 10. Realty Income Corp, O. REITs have the upper hand when it comes to monthly payouts. Realty Income Corp O is a commercial real estate investment trust that focuses on single-tenant leasing. The consistency of Realty Income Corporation is something we admire. The company has experienced consistent sales growth over the last 5 fiscal years, as well as rising net income. This REIT's growth is modest, and it lags behind the S&P 500, but that's one of the negatives of buying a company like this. Because of their nature, REITs invest their money in expanding assets and paying out 90% of their profits in dividends. As a result, they don't have the same mobility as more traditional names. Realty Income appears to be a good monthly dividend bet, with a 3.74% yield and an ever-improving balance sheet. Number 9. Shaw Communications Inc, SJR. Shaw Communications is moving away from real estate. SJR is a telecommunications company based in Canada. This business isn't going away anytime soon. In fact, it's becoming increasingly common in our daily lives, for better or worse. SJR, a mid-cap stock, pays a 4.64% dividend and has the fundamentals to keep it running. While revenues have remained relatively flat and operating income has shrunk in recent years, we believe SJR is a strong bet if they can effectively grow their wireless section, as that is where the cable industry is headed. Number 8. BlackRock Limited Duration Income, BLW. BlackRock Limited Duration Income Trust is a closed-end management investment company with a diverse portfolio. It's wonderful to have yields of 6.2%. BlackRock's BLW is a closed-end investment company that invests in a variety of bond and mortgage-related assets, as well as U.S. government securities, among other things. Aside from that payout, you're not going to get anything out of this fund because the shares themselves don't do much. Number 7. Gladstone Investment Corp. Gain. Gladstone Gain has a dividend yield of 7.08%, which is similar to BLW. The management investment company invests in debt instruments in businesses that it considers to be stable. It also seeks capital appreciation by investing in stocks. Earnings are erratic, according to all accounts, but the company is profitable, with an overall upward trend over the last 2 years. Number 6. Vanguard Long-Term Bond Index Fund ETF, BLV. BLV invests in long-term 10-plus-year U.S. government, investment-grade corporate, and overseas dollar-denominated bonds, all of which are considered high risk for their class. BLV has averaged a 7.03% annual market return since its inception. It has a 3.34% dividend yield. Number 5. Wisdom Tree U.S. High Dividend Fund, DHS. The Wisdom Tree U.S. High Dividend Fund DHS is another low-risk fund with a respectable 3.5% dividend return. It's a good bet on substantial value. DHS owns stocks such as AT&T, ExxonMobil XOM, Verizon VZ, Coca-Cola KO, and Chevron CVX, which track the Wisdom Tree U.S. High Dividend Index. Over the previous 2.5 years, the fund has behind the S&P 500, but you're not investing in dividend stocks if your goal is to merely outperform the market. If you're looking for a stock that can stay up with the market while hedging risk and paying a monthly dividend, consider DHS. Number 4. Invesco S&P 500 High Dividend Low Volatility ETF, SPHD. The SPHD fund aims to match the S&P 500 Low Volatility High Dividend Index's performance. In summary, they invest in low-risk S&P 500 dividend plays. Ford F, Altria Group MO, IBM, General Mills GIs, and AT&T are among the companies represented in the fund. The fund pays a 4.26% dividend, and the stock's performance is comparable to that of the S&P 500. SPHD is a great option if you want to essentially watch the market while receiving monthly rewards. Number 3. Invesco Preferred ETF, PGX. The Invesco Preferred ETF PGX tracks a fixed-rate preferred stock index, combining average risk with average returns. The corporate sector accounts for 97.62% of the fund's holdings. Preferred shares account for 91.69% of the fund's assets. PNC Financial Services PNC, Citigroup C, JP Morgan JPM, and Bank of America BAC are among these holdings. Yes, there are a lot of banks involved. If you desire monthly earnings, PGX is a good bet with a 5.46% dividend yield. Number 2. AAM S&P 500 High Dividend Value ETF, SPDV. SPDV seeks to track the performance of the S&P 500 DIV and FCF Yield Index with a dividend yield of 4.43%. The fund invests in S&P 500 securities that have strong dividend yields and are steady. Consider Campbell Soup Company, CPB, General Mills, GM, and Delta Airlines, DAL. SPDV, a relatively new fund, has been tracking the S&P 500 very well until the beginning of 2019. It does, however, pay a nice monthly dividend. Number 1. Proshares S&P 500 Dividend Aristocrats ETF, NOBL. The Proshares S&P 500 Dividend Aristocrats ETF NOBL, which is essentially a monthly return from exposure to the market's top dividend names, invests its funds in companies like Procter & Gamble PG, AT&T, and Sherwin-Williams SHW. This is a low-risk investment that does not produce the high profits that some of the other names on this list generate. With an annual dividend yield of 2%, you're not likely to make a lot of money, but you'll get a low-risk monthly payout. Furthermore, because the fund's market returns tend to trail the S&P 500 by a small margin, you're essentially acquiring a low-risk exposure to market tracking. What do you think of our video? Let me know in the comments section below. If you enjoyed this video and want to hear from me again, be sure to hit that subscribe button before you go. Thanks for watching.